The waves have come crashing down on surfwear maker Billabong. The troubled company has unveiled a full-year loss of nearly $300 million. New chief executive Lorna Inman has unveiled a strategy she hopes will restore Billabong's fortunes. But it may not be enough to fend off private equity group TPG, which has a $1.45 a share takeover bid sitting on the table. Andrew Robertson reports.
2012 has been a wipeout for Billabong, but Lorna Inman, who's only been chief executive for 3 months, was putting on a brave face.
Today's results reflect further turbulent times for retail, not only in Australia, but also in Europe, Canada and New Zealand.
It also represents a failed retail expansion strategy just before the global financial crisis, for which Billabong is still paying a heavy price. Costs and write-downs associated with that strategy saw Billabong record a loss of $276 million for the 12 months to the end of June. When those one-offs are stripped out, net profit was just $34 million on sales of $1.5 billion.
Very much dived into the retail strategy without a well-structured and well-organised plan. Thought they would leverage off the brand quite strongly, and simply by opening the stores without the appropriate infrastructure, both on the supply and technology side, the company really did get caught out.
In a bid to stem the tide, Billabong has already closed scores of shops, spun off its Nixon skatewear brand and conducted a capital raising. Now it's unveiled a turnaround strategy which will involve the closure of more stores and a focus on core brands to try to restore the company to its former glory.
We need to understand what the consumer wants. We also need to understand what is the best format for that. We're going to be trialling some, and only when we've trialled them and taken the learnings will we then move on to actually roll them out.
But retail analyst Peter Ryan says it's more than that. He believes Billabong has lost sight of its roots.
Billabong used to have a unique Australian twist on a belief that if you had a board in your life, it was better. Whether that was a surfboard or a skateboard or a snowboard, didn't matter. But if you had a board in your life, it was a better life. And I don't see that coming through everything that they do anymore.
The big shadow hanging over Billabong is the takeover offer from private equity group TPG, which has now begun the due diligence process. Lincoln's Elio D'Amato thinks there are some positive signs that Billabong may be able to fight it off.
I think if you look at the market's reaction to the announcement today, with the price actually falling, I think they are pretty much thinking they can. TPG's offer of $1.45, if the market had felt that there was a chance, then you would have seen the price gravitate towards that.
And that may yet happen if TPG raises its offer.